Hello guys, my name is Ever and I'm going to explain to you how to solve the brief exercise number 11 and I'm going to read it here. From the ledger balances below, prepare a trial balance for Pete Company at June 30, 2017. All account balances are normal. Okay, so the first thing we need to have in mind is what is a trial balance? I just added a definition I found here at accountingcoach.com. I'm going to read to you guys. So I quote, a trial balance is a bookkeeping or accounting report that lists the balances in each of an organization's general ledger accounts. If you want to read the one in the book, I have it over here. If you need more time reading it, you can pause the video and you can understand it. Well, the other thing, as you can see, I have over here something. Let me edit it. Okay. As you can see, the trial balance is divided in two. It has a column with which we call it debit, and the other column is credit. So what is debit and what is credit in a trial balance? I have the definition over here. I found it at accountingtools.com, and I quote, what is the difference between debit and credit in accounting? A debit is an accounting entry that either increases an asset or expense account or decreases a liability or equity account. It is positioned to the left in an accounting entry, as you can see it over here. So what is a credit is an accounting entry that either increases a liability or equity account or decreases an asset or expense account. The credit is over here on the right. So as you can see, I already have it here, the trial balance, debit, credit. Here are some zeros, I just added some formulas. We need to sum the quantities we're going to have in each column. The other thing I want to tell all of you is I have over here helpful hint. This one I copied it from the book, and it says, know that the order of presentation in the trial balance is first one being assets, the second one being liabilities, the third one being stockholders' equity, then revenues, and last but not least, expenses. So I think we all know what an asset, a liability, stockholders, revenue, and expenses are, since we all are in the same course and we're making our homework. So I'm going to skip the part about explaining what an asset is and all that stuff, since we should know it by now. So I'm going to start now. I'm just going to put first one here is if it is accounts payable, cash, common stock, and then I'm going to put the amount here. So first of all, assets. Since we have read it here in the helpful hint, the first one is assets. So we all know that the most liquid asset is cash. So we check over here and we have it here, cash. Cash is 5,400. So we are going to put it here. So you might ask, what is he putting in the left? Well, we're going to read again the definition. A debit is an accounting entry that either increases an asset or expense account. So of course assets are going to go in the debit column, okay? So we search for the other asset, and the other one is accounts receivable. And accounts receivable is 3,000. Okay, now we finished the asset, how do you want to call it, the asset column or the asset, well, the assets. I'm just going to try to fill it a little bit so you can kind of differentiate it. Okay, some blue. Okay, assets are blue. So the second one is liabilities. The other hint is liabilities. So we're going to read again the definition. A credit is an accounting entry that either increases a liability or equity account. So of course liabilities is going to go in the credit column. Okay, and oh, I forgot about something. We know the equipment is another asset. Well, it's in the property, land, and equipment, but it is under total assets. So we're going to clear it here. I apologize for that. And equipment is 13,000. Okay. So now we go to liabilities. Okay, the first liability we have here is what's accounts payable. And this is over here in the credit column, and accounts payable with 1,000. Okay. Then we see we have another liability. I don't see the other liability right now, so I'm just going to go to the next one, which is stockholders' equity. Okay. I'm going to read again the definition, so I hope you can understand it. A credit is an accounting entry that either increases a liability or equity account, or decreases an asset or expense account. So common stock or stockholders' equity is something that, as the name says, it is an equity. So it should increase an equity account. So stockholders' equity goes to the right under the credit column. Okay, so we have a common stock. And common stock is 18,000. Okay, accounts payable is a liability. I'm going to mark it, I don't know, orange. Orange as well. And then we have revenues and expenses. But before revenues and expenses, we see over here that we have dividends. And dividends is one that is always subtracted in the retained earnings. I don't know if you remember that. So, dividends. Which one is dividends, a debit or a credit? So, a dividend, debit is an accounting entry that either increases an asset or expense account. So, as it says over here, it should increase an expense account. So, dividends, we are paying them. So, this one goes over debit. So, dividends are 1,200. And it's going to be a blue one. Then we go over to revenues. As you can see over here in hints, we have assets, liabilities, stockholders' equity, and we added their dividends. And then we go to revenues. Okay. So revenues, the only revenue I see over here is service revenue. And where should it go? So we're going to read again. A debit is an accounting entry that increases an asset or expense account or decreases a liability or equity account. So I don't see that revenue should be over here in debit, so we're going to read credit. A credit is an accounting entry that increases liability or equity account or decreases an asset or expense account. So over here we see that should decrease an asset or an expense account, since we are receiving something, we are generating revenue. So this should make us have equity, so we can spend this money. So remember that revenues go under the credit column. And revenue is 8,600. I hope I'm kind of explaining myself over there. The revenue should be orange. Then the last one is expenses, and we have salaries and wages expenses. I'm I'm just going to, this is kind of blank. We'll read it again. Debit is an accounting entry that it increases an asset or expense account. So it should increase an expense account and it goes under the column of debit. So salaries in which expenses are 4,000. And the last one is rent expense. And as you can see there, we have the, oh, this one's are blue. Okay, so, oh, wait a moment. We have something wrong here. I added something wrong. Oh, sorry. This is 4,000. Over there. So now this problem is solved. I'm going to the definition of the book, and it says that the trail balance proves the mathematical equality of debits and credits after posting. So as you can see here, the total is 27,600, and under credit is the same one. So if there's a problem, if you have any questions, you can either email me. My email, I'm just going to put it over here. That's my email. If you want to, I don't know, if you want to me to explain it a little bit better, any kind of question you have. Hope it was clear. I need to apologize for my English. As you can see, I'm not a, well, as you can hear, I'm not a native speaker, and I live here in Mexico, so I don't have many people which I can practice with. I'm trying to improve it every day, so I hope you're all doing well, and if you have any questions, you can reach out to me. Have a nice day.